interviewing the leading private equity executives and unlocking the secrets of success. Welcome to the Private Equity Podcast with Alex Rawlings.
Welcome to the Raw Selection Private Equity Podcast, interviewing the leading private equity executives and unlocking their secrets of success. Joining us today is Teresa Farmaki, Managing Partner and Co-founder of Astarte Capital Partners. Welcome and thank you very much for sharing your insight into the industry, Teresa.
Thank you very much for inviting me, and it's my pleasure and honor to be here.
Perfect. So as we usually start, Teresa, if you could give us a kind of 60 to 90 second breakdown of you, please.
Sure, absolutely. So I'm managing partner, co-founder of Astarte. My background in private equity started from finance. I'm originally actually born and raised in Greece and started my career in Greece. Moved to New York, spent some time doing my MBA at Columbia and also starting into the real asset industry, which at the time, the term did not exist. So we used to call it global power generation, utilities, energy, renewable energy eventually, and then growing into what real assets is today. So started my career in New York, discovering private equity after investment banking, and then moving and dedicating the rest of my career in private equity. I've spent time in project-based investing, like renewable energy, in growth capital, early stage, which is always a passion, and follow it occasionally. And eventually in 2015, starting my own firm, Astarte, which really combines that experience and dedicates itself in investing in real assets and specifically in helping teams grow their AUM and scale as established asset managers in the real asset space.
Interesting, very interesting. So obviously you've lived all over, initially born in Greece and then moved over, as you mentioned, to New York. What made you call London, or at least home for now?
It is true. I forgot to mention London is home and has been home for the last 10 years. Reality is it's kind of like life happening or making choices and the world or your role taking you there. My main choice was to establish and continue my career in Europe. Given that my origins, obviously my family was still in Greece, or is still in Greece, and wanting to develop my career and establish myself somewhere closer to home generally, or the region that I naturally grew up into. And within Europe, London is the main, let's call it a financial industry center. So for private equity, for asset manager, it was a very natural place to establish myself. At the same time, I have to admit that my husband had previously lived another 10 years in London. So his natural base was London, and he does have 3 children from his previous marriage based there and living there. So of course we wanted to be near. So kind of combination of professional and personal choices.
Makes sense. And yeah, private equity hub of certainly of London being a pretty busy place for it. So makes sense. So what one mistake do you see either private equity firms or their portfolio companies making, and what actions would you take to correct them?
Interesting. I would say in terms of private equity firms with respect to their portfolio investments, since you mentioned both, I would say the biggest mistake we see is finance professionals not appreciating technical or operating expertise, feeling that because you command the financial world and have the capital, you are able to just make decisions and take control of operating businesses or projects. I mean, being in real assets, which is particularly sensitive to operational expertise or technical expertise, is even more acute to say it, but I've noticed the same thing or the same mistakes previously when I was acting in more growth capital world or buyout strategies. Every company, in order to deliver performance and to properly, to be successful in your investment, you really need to understand the ins and outs of the sector, the company, the value chain, and of course the people. It's not just coming in with, off-the-shelf approaches or one suit fits all. So It's really taking the time, meeting the people, spending time on the ground, on the floor, whatever the target investment is, and creating or developing approach and practices that really fit the culture and the legacy of the business. Which brings me maybe to the other, what I see often a mistake in private equity, or a problem, I guess, is private equity is fairly long-term business. I mean, regardless of your strategy, it could be shorter or longer term, but generally is a longer-term business, right? You go in a certain point, you manage, you deliver a business plan, and then you exit delivering returns. Professionals, being human, sometimes can be more short-term minded than the industry is really. And that only eventually catches up with you. You need to be consistent. You need to be always understanding that the goal is it's creating relationships, developing relationships, and delivering performance in the long term, because it is a long-term industry. You will need to do it again. You will need to continue. So short-term approaches, maximizing profits today at the expense, perhaps, of competitive advantage or value creation or shareholder value in the longer term is definitely only about for trouble.
Makes sense. So on your website, it mentions the term real assets. Now, I know in private equity, in finance, in business, we all have different terms and they all mean different things to different businesses. So what's your kind of definition of real assets, and why did you choose that as a particular investment focus for your firm?
Yeah. First of all, okay, what do we mean with by real assets at Astarte? So we mean tangible assets that play or offer an essential service in their environment or location or community. And that generally involves infrastructure, assets, energy, natural resources, or natural capital, as we even more like to define them today, meaning land-based solutions, forest, agriculture, primary field, and real estate. The real assets is now more and more, or has been in the last 5 to 10 years, being used more and more as a defined term and sector or portfolio allocation in both investors' portfolios and manager strategies. Reality is it has a unique place in portfolios because of, effectively, I would say, two big elements. One is low correlation to capital markets. Generally, you're talking about assets or physical assets whose value and return generation is not directly linked or doesn't depend on movements of capital markets, for example. If you take the value of a forest, regardless of what happens in the stock or fixed income market, it won't change, right? You have trees growing and harvesting them, and usually you have long-term agreements with it to sell them, which comes to the second point, why there are distinct characteristics or portfolio allocation, is because usually the return generation is associated with long-term fixed contracts. If you think about power purchase agreements, or offtake agreements of wood, for example, as I mentioned, which means that there is relatively visibility or security of cash flows over a long-term period of time, rather than open market exposure, right? Like a consumer company would have in selling their products. And that makes it, from a portfolio construction, if we're looking at LPs now or investors, a unique asset class, effectively, right, to use for portfolio, for diversification and portfolio construction. And for managers, at the same time, it is still a combination of sectors that have similar elements, right? You're talking about hard assets, long-term assets, fixed, like long-term contracts. So elements that, again, like there is a commonality in how you approach their underwriting, due diligence, structuring to it, or financing them, again, right, which is an important part. So that's why we define them. That's why real assets, I believe, have been, actually, according to McKinsey report, real assets has been the fastest growing market of private equity today. Oh, really? And will continue to, and will remain. Big driver for it is because you have private investors opening up or increasing their allocation. So a lot of money needs to find their place into the space. It is also more complex, so naturally, only recently has started being exploited that much. Financial crisis, volatility in capital markets, or uncertainty, and quite frankly, low return environment in the fixed income space, and low return environment, low interest rate environment, right? All of these reasons have pushed investors to new areas, more private markets, to find returns, to find yield, to find income, and that's all the reasons effectively that is driving now growth in real assets. Why Astarte? Why we focus on real assets? First of all, this has been, as I mentioned before, previously, this was always my background, right? So naturally, I was a participant and observer of these developments in the real assets market. Eventually, with my co-founder in 2015, we decided to create Astarte because we believe that there is a significant opportunity in the space. It is a very fast-growing space. It will remain a fast-growing space. And there were gaps in the market for a manager to be offering value add to investors and to market participants. So that's why we decided to create a company dedicated in that space, and even further maybe specializing, because we have quite a specialist strategy or focus, is we are trying to help LPs or investors get exposure in more thematic, niche, specialist strategies within real assets. Commercially, we call it whatever is below the radar of the Brookfields, Blackstones of the world. We are, as part of our strategy, our investment strategy, we are always like to create joint ventures or back new teams, dynamic teams that have a clear operating expertise in that space, kind of always playing us being a capital partner, financial partner, them being the operating partner, deploying capital, buying assets, growing assets, managing assets in the space.
Okay, all very interesting. Thank you very much for the definition clarification from an Astarte Capital perspective. You spoke a little bit at the start about that mistake that you see private equity firms making, feeling that they provide the capital, they have the expertise of running the business. How do you kind of balance that? What I regard as, some people coin it value creation. It's got loads of kind of titles. You mentioned operating partner there. How do you balance that kind of, you obviously having the ownership over that asset, depending on obviously whether you would take majority, minority, but you're interested in that asset, and then also letting kind of the portfolio leaders and them kind of run the business and drive it? How do you kind of balance that, your involvement versus, guidance and development of that?
Yeah. Well, you're touching actually something that's very much at the heart of the company and our philosophy, quite frankly. We truly and genuinely believe that successful investing and the future of investing is partnership between operating expertise and financial expertise. In today's world, specialization, sophistication in both of these worlds effectively demand that to be successful operating expert, to be an operating expert, you probably have developed your life developing that expertise, right? So probably that didn't leave you a lot of time to do other things, like become an expert also in financial products, and vice versa. Like actually it's the same thing in the fund management world, private equity, investment world, right? Developing expertise in investing, underwriting, structuring, you probably didn't spend a lot of time also developing your expertise in building bridges or designing bridges or whatever else. So we actually believe that next generation, the future of investing is to be able to create partnerships between operating experts, industry experts in general, and the financial world, right? Or the asset management world. And that's what we do. So the core of our investments is to be able to create a partnership or a platform that combines and works well between the two parties. So for having a balance there. How we create the balance is, I guess, the trick, right? Or the value creation, both sides, you want to say it. We spend a lot of time with our partner. We start from the fact, though, and to your question maybe, or how do we do it and what do we suggest? We start from the fact that we come into this discussion appreciating that we are not the operating expert, right? And we don't know their job better than them. And that's a big recognition that a lot of people don't necessarily come on at the discussion with. We start with that. So from us from the beginning is let's leverage let's allow you to run the stuff that you run best and allow us to run the stuff we know best, and create a framework that the decision-making is on leveraging both of our capabilities, instead of, shifting effectively decision-making on people that are not best suited to do that. Obviously, this sounds great, and there are areas that can be contentious, and you need to have, veto rights, or you need to have consent by both parties. But that's really how we do it, quite frankly. And that's the expertise we have developed, and what we would like to represent at Astarte is.
Very good. Appreciate you sharing that. And obviously a lot of passion and energy. So I clearly hit the right note there. So I'm pleased I asked that question, Teresa. So Teresa, one thing that I think is pretty prominent at the moment within private equity is its lack of diversity. Now, diversity doesn't just mean females, it means ethnic groups, it means all sorts of different areas. Typically it's come from, and I don't think it's particularly a private equity strategy. I think it's where people go into finance and where people make decisions of how they go. And obviously as private equity begins to diversify, not only we only take people from investment banking and management consulting, and we look outside of that in some parts, but we begin to see that. So as a female founder of a private equity firm, what advice would you give to maybe other private equity firms on how they begin to create an environment which can accommodate and attract and diversity away from what we regard as the kind of typical white male private equity firm hiring process?
Yeah. Now that's a huge discussion point today for sure, right? And has been, and I think it will continue to be for a while, because I do believe there's still work to be done. Although I recognize that a lot of progress has been made. The world today is extremely different than the world when I started my career, right? In a good way, in a positive way. Now, the first thing, again, I will go back to culture preconception. I mean, companies need to believe, first of all, that diversity is good for them, right? Not just something that investors impose. Diversity, everybody, and it's fun in some ways because everybody acknowledges diversification benefits in portfolio, and then they somehow just don't see it when it comes to team composition, right? And they keep hiring exactly the same profile people. So the first step is always, we need to believe that there's a reason we're doing it that is good for us, right? Not just to meet quotas. But in any case, outside of that, now, the biggest problem I see in being effective in that, in meeting those, meeting diversity or being effective in that sense, even if you really truly believe and want to engage, that is that the candidate pool can be narrow or shallow, the more senior you go. Mm-hmm. You in junior year, and I mean that's generally widely accepted, right? That in junior levels you have a much more balanced representation of gender, ethnic, or whatever it is. The more senior you go, that's where you run into. And now speaking more about female, for example, the more senior positions and roles you get, that's where it becomes, the more imbalanced. Or to say another reality that a lot of people hide behind is that they meet their quotas on senior levels from consistently less investment roles, right? So you see senior people in operations, HR, sales, IR, and they are senior positions. But at the same time, if you look narrowly, board composition or investment team or investment committee composition, you still actually is not that diversified, right? Yeah. So interest there, a lot of it goes back to actually availability of candidates. So there is, in my opinion, my suggestion or solution is to work with creating available candidate pool. And I've heard about interesting practices today in other firms where they start internship programs or training programs for board members, for, let's call it female or minorities, right? So you allow people that you think have the right profile otherwise, but not maybe the experience to cut it, to make it for the job, by training them into the role. So this way, when there is a next role opening, you have an actually more diverse pool of candidates to select from. Because at the same time, even though obviously I'm all for diversity, you cannot choose just because of that, right? It has to be the right skill set, not only on a diversity level, but actually on skill set. So a lot of it, in my opinion, has to do with working and helping Is it female? Is it other ethnic minorities, to actually have access and build up the experience to be competitive candidates, among others?
No, I think that's really, really interesting. It's a difficult topic, because I think I completely agree with you. There is less, certainly at a more senior level, more junior level, still not as balanced as you'd see it. But I don't think that's private equity's fault. It's got to come in from, private equity isn't going to start hiring from, the retail sector to bring in their executives, somebody who's worked as a cashier. It's got to come from a certain financial aspect of it, whether it's investment banking, management, consulting.
There is something though to touch on as well on top of it, right? That has to do with private equity. And I mean, and don't forget, I'm a female founder in private equity, but within private equity, within real assets, right? And that's even less diverse.
Quite a niche person.
so a lot of it is soft biases that even women have when they're making career choices, right? Because it's not only choices of white male choosing the next candidate for the next job opening, going back to the pool of candidates, etc. It's actually interesting, and for me it was eye-opening is when I participated in a mentorship program or actually I read a research report from universities, and women graduates chose not to go into industries that were perceived as more cutthroat or more white male industries, right? And that actually hit you, and you're realizing that the problem starts much earlier on. It's softer biases, right? Or cultural things that we all build up much earlier on than we think. It's not just unfair treatment when we are already a VP. For a lot of qualified or quality and competent people, it starts much earlier on when they are making a decision: should I go into finance or should I become an engineer, or should I choose a marketing career versus should I choose an investment career? Should I go into consumer products versus should I go into energy, right? So actually a big effort of mine personally now is to participate in mentorship programs or that are targeted to young graduates or even high schools, right? Where you really are still working, building up, the preconceptions, or building up the expectations of people on how to think about things. And actually that's contrary to a lot of my peers or professionals who think that mentorship in such young ages, it's less effective or people don't know what they want, which is all true. But then mentorship is not only about career advice or getting them into a role, right? It's also actually in helping people how to think about an industry. And private equity, quite frankly, needs to do a lot of work in that, right? Because there has been such bad legacy from time to time about private equity. And still, you hear people, you tell them you're in private equity and they go, oh, you're a bad person, most probably not. So I actually make it a big effort of mine, and I'm very supportive of mentorship programs and equivalent, diversity programs, even at high schools or universities.
I think that's fascinating. I think I completely agree. I think that the issue doesn't just sit from a private equity perspective. How do we just hire more women? I think we need to hire the best people for the job. We just need to encourage more people to be attracted to this world and understanding. And we spoke briefly before this session recorded about the kind of hidden agenda of private equity, and there's a real lack of open and transparency, and it is a bit of I don't like the term cloak and dagger, it's not right, but it's definitely a cloaked environment and people can't talk about it. And if you are in it, the amount of individuals that we've either approached or have approached us about being on this podcast and then been told by their firm that they can't be unless we're scripted and we're only allowed to say certain things. I'm only allowed to ask these specific questions. And if we go off topic, it won't go live. And I'll tell you now, none of them have made that onto the show. So I think there's a little bit more open transparency. I think it's really interesting the point you made about why women choose certain careers. And suppose I've never even thought about it. If you think a lot of women are in investor relations, a lot of women are in marketing within private equity, and it probably balances out, that there's probably more women in those areas than there is men. So how are we getting people into that investment team? And maybe it is because it comes across as a little bit more cutthroat, and therefore it's not something that maybe women are channeled because of environments, because of social biases and whatever else that comes in. But as you said, it's a fairly big topic that we could speak for hours on. But no, I appreciate you sharing that and giving certainly some insight. So to bring it on to my kind of favorite topic, Teresa, talent, what kind of 3 attributes do you believe make a top performer within private equity?
Yeah. So there are 2 that I would say are basic and obvious, and one that I think is easy to check, but quite frankly is absolutely important. So the 2 basic ones is, you do need attention to detail and you need discipline and diligence, right? Because private equity is about transacting in an area that there is no standardization. So by default, like, you need to be extremely diligent in making sure that you really follow a process, you don't leave out areas that you should have checked, and you have attention to detail, not to, to capture everything and not to miss everything. But that, I would say, probably is expected for me to say. The third point, and I would say that's probably the biggest differentiator of someone being a great employee generally, or actually someone who can be top performer in private equity.
No, Teresa, if you can hear me, you've just oh, bear with me, I just lost that. You said great employee within private equity, and then you paused. It froze, I'm afraid.
So I said that the third element that I think is actually the biggest probably driver on someone becoming a great performer in private equity, not just a good employee, as in any role, is commercial and critical thinking. And that's probably the more difficult to screen for during a recruiting process. But it makes the whole difference, because private equity, again, going back, is understanding market opportunities, understanding business potential, understanding people, understanding whether a company or a project or a team can compete successfully better than their peers, right? And take advantage of opportunity. And you will not get that just by adding data on a paper, right? You need to be able to combine them in a way that is more closer to what people refer to as critical thinking, commercial element, and get that feel whether there are underlying issues, weaknesses that can be too big of an impediment for success, or actually there is that element, right, that can get them successful. I don't want to sound, and there's a big distinction by gut feeling. I'm not talking about gut feeling. I'm talking about combining data in a way that gets you that reading through the lines and combining them in commercially meaningful way, rather than, seeing a presentation. Because someone can look great, but then give you all the hints you need that there is lack of substance, for example, or the other way around. They may not be that polished, right, on how they present, but they really have, and they can demonstrate all the real drivers for success in their strategy. So you need to be able to identify, first of all, what are the real success drivers in a specific investment, and then combine the data or the analysis you have to be able to test if you have the answers you need.
It's interesting. Never had that one mentioned before. It kind of comes down to a kind of that experience of having that scenario and knowing when that answer is given or that position is given, it usually means actually this or that. But then also having the intelligence to be able to gather that experience and not have to have over 20 years kind of thing.
Yeah. And first of all, you're right. You develop on that, right? You get it's through experience, you build it up. But interestingly, from my experience, from seeing people rising through the ranks or having others that become great performers or others not, you still need to be able to have a little bit of the critical thinking element. Otherwise, you will reach a ceiling, if I may say, and you will become a great employee or a great team member, right? But not be able to become a great performer on the investing side. So you can have other elements, right? Other roles that do not require that. But if we're talking about top performance in private equity, we usually talk about investing capability or ability to generate, to identify opportunities, structure them, execute, exit, right? The delivery performance. And not everyone can have the same ability to actually combine data or information in the same way. Now, I wanted to make one more point, which maybe you cut out the blank, but I wanted to make one more point around that. I forgot. Don't worry. If I remember, I will tell you.
Okay, perfect. Well, thank you for sharing all of that. And I agree. There's a bit of experience, intuition in a way, but that commercial critical thinking is that ability to be able to develop that and then utilize it. And I like the way.
Yeah, I remember actually what I was about to say. The other element, a bit combined to the critical thinking, is the being commercial, is thinking outside the box, or being able to think outside the box in order to be effective or get to what you need. So I'll give you a very good example. Like, you're investing in a company, in a retail store, right? Let's call it its phone, like mobile phone accessories, etc. You can do all the analysis you want perfectly, desktop, like best school, best investment banking, like process, financial, legal, etc. Have you actually gone to visit the store, right? Like, have you actually gone to try and check the traffic in a specific location? Just stand outside, pass by the street, like, that's not desktop, that's not like in a book. But do you really? But it's behind of, if I want to see if that customer, if that company, right, is attractive to consumers, there are ways to test hands-on, like try the product, go and see, like pretend to be, pretend to be a patient and call a hospital, like, or a clinic, right? And see what your experience is. Like, be a little bit more experimental, right? Not just necessarily rely. And that's part of what I call best performance.
Yeah, and it shows a lot of interest, and it shows a lot of, especially if you're looking at maybe an acquisition of a business and you've gone into that and looked into, do you know what, I actually phoned one of your sites and we have this conversation, and that backed up everything you've been saying. It shows a lot more, and it then doesn't just come down to the fight on price. It comes down to who's going to be the best value investor, rather than who's just going to throw the most amount of money in at the acquisition phase.
The question I like to ask new joiners, especially for people who were not in private equity before, like in investment banking or consulting or whatever, is I told them, the question you need to think is, would you put your money in that? Right? Okay. Because people, it's easy for them to think, like, let's make a great presentation, let's make a great analysis, let's do a great memo for my board. But the thing is, would you put your savings in that? Right? How would you think if someone told you, you put your money in this? What would you do?
I like that question a lot, actually. No, I've never heard anyone actually say that. I think that's really a good way of interviewing, good way of discussing. How would you? And I think a good way of looking at, even when you've got experienced people, would you? I mean, there's obviously an element of that because they participate in a carry pool or whatever else. But would you put your capital into this business, and kind of money where your mouth is type scenario. So one of my favorite questions, Teresa, what do you love about private equity, and equally, what do you dislike about it?
What I love about private equity, for me, the main reason I went into private equity is because I found it to be the best, the closest thing to produce, to create, since I did not go into engineering, right? And I always had that guilt that, am I contributing to the society, being a finance person, right? So for me, private equity, what I love about it is that you actually get to build things, get to create things. You meet people, you work with people, and it's all about people. It's not securities, it's not titles. I actually started my career in trading, and the reason I left and tried other things is because I felt I was too detached from decision making, from value creation. So for private equity, for me, it's the beauty of it, or the passion of it, is that every day I meet interesting new people that have an interesting idea, right? And they're trying to do something in the world. And if they don't, I'm not interested. So Now, what I don't like or what I dislike about private equity is that unfortunately there's a lot of money to be made. So people it attracts a lot of people who are not of the same mindset. They're not looking to create things. They're looking to just make money for themselves, not promoting necessarily best practices. And that's, I think, is the biggest problem is short-term minded thinking, misalignment. You are investing other people's money, right? So there is power with that. There's a responsibility with that. And as in every industry, of course, bad practitioners put a bad name, obviously, and all of that. And it's a lot of, and you see good people being hurt and all of that, which in private equity can get, I think, particularly intense because it's a lot of money at stake.
Yeah, absolutely. Absolutely agree. So Teresa, you've shared a lot today and I really appreciate all of your insight. If anybody wants to reach out and connect with you, how best do they get in touch with you, please?
My work email, which is my first name, Teresa @astartecp.com. It's the best way. Happy to share or for you to share my email, whatever works.
We'll put that into the show notes. So, well, thank you very much for joining us. Thank you very much for sharing. I feel like we've talked a lot of topics and gone over a lot of everything from, I hate the term value creation because it's overused now, but from value creation within businesses, what private equity firms and that connection between the leadership and what do they bring to the table with the strengths. Talked about gender diversity and all sorts of different bits and pieces. So thank you very much for bringing your energy, your passion, your drive, determination, and sharing all of that with us, Teresa. Thank you really do thank you for that.
Well, again, my pleasure to be here, and thank you very much for inviting me.
Perfect. And as always, thank you very much for everybody joining us and listening. And of course, if you should need executive hiring for your private equity firm or your portfolio companies, please do reach out to me at Raw Selection. But till the next time, keep smashing it. Thank you very much for listening. If you haven't already, please do subscribe.
Thank you for listening to the Private Equity Podcast on www.raw-selection.com.